What's good, everybody? Welcome back to another video. It's your boy, the one and only. You already know who it is. Welcome back. Thank you guys for the support that you guys were leaving in my previous video talking about me not having to put on indicators on my charts and using certain key levels and things like that. I appreciate the feedback. I appreciate the concern, guys. No, I'm not leaving ICT. No, I'm not leaving smart money concepts. I feel like it's taken out of context. I said I was leaving smart money concepts and ICT concepts behind. Concepts. There's many concepts in ICT realm. I'm just redacting, retracting all the annoying things, all the things that make my trading a lot harder, and too advanced for my liking. And I like more simplified things. And so I'm still using ICT theory. I'm still using algorithmic principles. I'm just adding a couple of filters to help my trading out and make it more simpler. It's just a different approach. That's it. But we took the short today here on NQ. This two red lines that you see are a balanced price range on the 1 hour. And we took our buy side liquidity. He's not using ICT concepts no more. We took our buy side liquidity, which is opposing liquidity run, and then we see this order block right here. Price returns back to the order block, and I took my shorts right here. These entries came in around like 8:33 for me. I think that's the time that I took them at. And then I was targeting this order block here that was taken at this low. So order blocks that take liquidity, you guys already know what that means to me. How can you possibly think that I'm going to leave something like that behind? So it was interesting to see how they came in here and they stopped like right under foot tracks right there. And then we have here, what's this other purple line? If we go to the 1 hour, this purple line back here is a key level. It is a previous swing high. This could be deemed as a rejection block kind of as well. But I'm not really considering it that. I just considered it a level where there was a large move lower. It's a pivotal level. It's a key level. We were above that this morning in that balanced price range that sits right there. Let me see. If that's not the 15-minute, then what is that? The 15-minute? No, it was somewhere. 4 hour? Probably the 4 hour. Probably I'm bugging. Yeah, it was a 4 hour. So it's the 4 hour balanced price range. This is the buy side of the curve, sell side of the curve. I told you guys I'm more interested in market maker models and things like that. Things that are simple to understand. But yeah, we had this balanced price range. So if you, the simple way to look at it, anything that's on the buy side of the curve can be used on the sell side of the curve. So we come here, we break below, close below, then we return back into it. That becomes a key level where we could sell a zone, and then it becomes an entry zone for me. And if you look on a 5-minute, this is exactly what we did today. We took advantage of that. The execution for me, I put on 3 contracts here. I wanted to build into this position, but I definitely couldn't just because I was in a meeting at work. So for me, when I had taken these shorts, I was making sure that I was getting in before I got into a meeting, because the meeting, where the meeting was held and the place it was held, there was no good service. There's no service at all, actually. So I was like, yo, I gotta make sure I enter here. I wanted to wait till like 8:30. I mean 9:30ish. But I was like, well, all the context is here. Everything is here. The narrative is set. Put my stop above the break, the balanced price range, and I was like, I'm at a high where we have confirmed rejection, lower highs are being printed, and I saw the order block. I was like, everything is leaning for me bearish, but I just don't know if I should wait or anything. But I was like, you know what, since I'm going to be at the meeting, I'm going to just enter here. It made a lot of sense. And I also wanted to trade Dow, and I would have possibly traded also S&P, but besides the point, I couldn't trade it. So I chose NQ because that's where the setup was clear to me. Again, buy side liquidity taken. accumulation, failure swing, opposing liquidity run. That was the idea. Then boom, we crash. Speed. And I'm going to add one more filter to make this a lot more juicier. 2 a.m. as well. So another thing that really made this trade so like high probability for me was when I saw them have this order block here, but then the 2 a.m. opening price, which is one of the prices that I use like so much, especially for NASDAQ. 2 a.m. came in here. We start rejecting off it here, formed like that double top right there. And I already know that's kind of like a rejection block, rejection play, like a rejection block play. When I see that form right there, and then I saw the change in the state of delivery, order block confirmed here, returns to the order block. That's all beautiful stuff, man. So I was in that trade, and I think I held to. I gotta see to what price I held to. I didn't hold the whole entire trade, but I held a good portion of it, which is everything that I needed and more. So let me just quickly go to Topstep. So again, it was just 3 trades, 3 micros, not too special. My risk was 10%, which was about, actually a little more. It was like 11%. It was $260 around there. That was the risk, to obviously make the 1,677. I knew it was going to be a very expensive day. Don't ask me how, I just know. And so my average trade duration, I'm still liking it. I love how today I stayed in this trade for, how long were these trades for? So for entry time 8:33, exit time was 10:15. So I love that. I actually love how I held to that. My exit price was 20,526. Entry prices were at 807. So let's do, what is it, 526. So 807. So my entries were up here, pretty much where the low of this is, right there. I'm not gonna add a line there. And then my thing was at, sorry, let me get back to it. It was, exit prices is 2526. So my exits were right there. And the reason why I didn't hold my trade all the way down into the failure swing and this order block here. So the reason why I didn't do it, because mine was, my TP was like right here at the opening price. But the reason why I didn't hold on to it was because I was again at an area where I didn't have service. And so since I already had caught majority of the trade, I was like, I'm gonna find a quick time to go into this office where there is service. And then I went in there and I closed this, and I was like, all right, I'm good. So then I let everything else happen throughout the day. We had some Nvidia earnings at 3:20, so that's why you're gonna see that 3 p.m. candle or that 4 p.m. candle, whatever, go crazy. So I did mention it to my boy that we were gonna have a loud afternoon session because of the Nvidia earnings, but yeah. So this is what we had, as you guys can see. So that's a nice profitable day, honestly, and week. Yesterday I kind of bugged out. I overtraded. But they were really good setups though. The only thing was I didn't have I had like, so on MNQ I had 4 contracts on for long positions. But like NASDAQ kept playing around yesterday. I was like, nah, I'm not gonna take the risk. Then I saw Dow, and I put on 3 positions for longs, or like 4 position. Wait, hold on, let me see. Let me actually count it, because I now I see 1, 2, 3, 4, 5. So I put on 5 positions for the longs, and again the longs were playing around. This was around like 10 o'clock. Yep, entry time 10 o'clock. And I did the same thing with NASDAQ yesterday around that 10 o'clock time. Those were 2 trades that I was looking for. Again, I was risking like $300 per trade. They were really good trade setups, but I just couldn't hold them because there was just a lot of chop yesterday. So like where was it that I was trying to long it yesterday? Let me see. Let me go back. Yeah, it was here. So here I was like stuck in this consolidation, and I just didn't like how Nasdaq was moving. But I was bullish. I was holding it up to these highs right here, but I just couldn't hold through this. I don't know why. I was kind of annoyed because I thought they were going to come down to this fair value gap here, and even come down into a lot lower here, like this balanced price range here. But like, I don't know, I just couldn't hold it. And the same thing with Dow. Like, Dow hit the fair value gap, and I like that, but then it started stalling as well, like very hard, and I was like, man, this is so whack. So I just closed my trades, and I took a L because I entered right around this area here. So my price position wasn't the best, just because I'll tell you why it wasn't the best. My price position, me entering it here, like my stop was kind of wide, and I had like five micros on, so I was like, nah, I cannot, I couldn't stomach it, because I was like, damn, they got a fair value gap below. I knew this had the potential of being a breakaway gap, but I didn't have enough structure to support that, and I was like, I don't know, I didn't feel good about the trade. But I knew what was going on. Like, I knew they were going to take out these buy stops here potentially and run into this, and we did that there, but I couldn't stomach it. And so today was perfect, though. Today was beautiful for me, especially with that 2 a.m. play right there. And then I took the same position literally on Dow, and on Dow I took a short in the afternoon where I was trying to short it. Where was it? So in the afternoon, I was trying to short it here. Like when they came up into this order block here, this order block was on top of an EMA. So I was like, oh, that's kind of good. Like, it gave me a filtering process for the PD array. I was like, all right, this PD array is in premium. This is cool. And then we were just, having this up move, crazy up move here. And so let me quickly delete this right now. If you guys look at this, this right here was a fair value gap I was talking about. We came down into this fair value gap and this BPR here, and I love that. Like, I love that. And I was trying to go long in here, but they just kept playing around. And I honestly was like, nah, I'm having too much emotions right now running through me, so I'm gonna close it. And I shorted here when they came into this fair value gap, order block, whatever, and shorted around here when they started showing all these lower lows. Like 1, 2, 3. I wanted to target this level at least right there. This right here is a mitigation block, or it could even be considered a breaker. But that level right there is what I wanted to see. And then they stopped me out, then run lower, but then chop for the rest of the day. I think I have the worst luck when it comes to overnight session trades. I mean, not overnight session trades, afternoon session trades. Like, if it's anywhere at that 2 p.m. mark, like, I just have bad luck. I don't know. I feel like I haven't mastered it. And I think I really just have to stick to the simple process of the morning session for me, because it's the easiest one to understand. Price action is just fluid there. And then today this happened here. They took out this high, accumulation, failure swing, opposing liquidity run. That's a bookmaking fractal that Kish taught me. Something I'll never leave either. Something that's easy to understand. Order block, fair value gap, all that good stuff, down into what was this level that I was looking for yesterday. So if you look at it from this standpoint, you can consider this support, literally. It is a breaker, but you can consider it support, like literally. There's a fair value gap, previous structure here. From the structure we literally left. We had a strong move away from this level right there, and then you go to the left and find supporting price, but I don't want to do that. This was like that short-term structure where price came and we found like support. Literally, it's not that hard, bro. It's easy as heck. Where am I on the challenge? So pretty much my balance is 51,752 with 16 cents. Yesterday I held the trades. Could have been a different day. I probably would have been done with the challenge, but it's not really something that I really care about. I just want to improve. passing this challenge or not. I just literally want to improve. That's all I care about. For the rest of the week, I say this with a grain of salt because this is a challenge. But for the rest of the week, I do want to be done completely. What I think I will do is, depending on the setup that shows up, we'll see what happens. I can't predict it, but if there's an opportunity to get another $300, $400, $500 this week from the next 2 days, then I'll probably try to achieve that. But I also, giving it from a mature standpoint, like, I'm also not going to beg and cry for it, so I'm not in a rush to get into a trade. And depending on how I wake up and feel, I'm probably just going to lock my account, because honestly, this is a solid week, and I could really just end the week here. And I think that most of us try to take on this challenge, or take on a challenge with, let me just say, with a lot of force and aggression. Like, yo, there's other days to be traded. I love how my trading win percentage, I don't really care about that. Like I told you guys, this was me trading on Tuesday, kind of messed it up. I first started the day with like a $400 win. If I would have just stayed there, you know, that would have been better. But I wanted to entertain those longs in at that morning time that I was talking to you guys about. Had I not entertained those longs, but I closed them because that was the best thing to do for me at the moment. It was just too much. That consolidation that happened was ridiculous. And if you guys look real quick, let me just show you guys real quick, and I'm gonna end this video right after. If you guys look at 10 a.m. opening price, I'm telling you guys, man, it's like I'm trying to figure out. So this is Chicago time. Why am I trading Chicago? You guys already know I like to trade in Chicago, or whatever CME is operating off of. I like to operate off their time. So if you look at 10 a.m., this is, let me just make it New York time. This is 10 a.m. right here. As you guys can see, we were not leaving that opening price. And then when you go to NQ, NQ was a lot more pronounced with that 10 a.m. I'm telling you guys, it's crazy. Let me delete this line. That was my exit. But if you guys look at 10 a.m., where's 10 a.m.? 10 a.m. opening prices right here. You guys look at how price was treating this right here. It was like up, down, up, down, up, down, up, down, up, down. And then this was the last break here. And then from there, all these down close candles, one order block, and then they just ran price higher to these equal highs here. They ran it back up to these equal highs here, and then I was gonna stop trading after these equal highs here, but I couldn't hold it, man. I couldn't stomach this consolidation right here, and I thought to myself, maybe like, oh, they moved a lot, very pronounced in the overnight session, London, all that good stuff, and then overnight as well. And I was like, you know what? I understand this profile. I've seen this 100 times play out to the buy side, but I just can't stomach this right now. And I was like, I'm better off just not trying to force it. I'm gonna just close this challenge. I mean, this trade, so I don't mess up this challenge. So I just closed the trade, and then it just happened to be, man, today's another day, and we just performed a lot better, man. So I literally only took those 3 contracts up there. At 8:33 was my entry, which was like down here. Yep, whatever it was, I don't know, somewhere there. I had seen, yeah, it was. So let's go back to this 8:33. Yeah, so 8:33 was where? 8:33 was this candlestick. So at this candlestick, I just entered short. Stops above the balanced price range right here. And I just entered and literally just took it where I wanted to see it. I didn't really care. It was a great trade. I understood the assignment, but I knew for position reasons I wasn't able to be precise in my entry today. I was just, since I was like at such a good price position, like up here where the move actually started, I was like, no matter where I enter, this is a good trade. I don't have to wait for the precision factor in there. I just took the trade because I was in the area where price would begin to run anyways. And just how I said, man, it was a really nice day. So us trading this today was amazing. And it makes up for those bad days. Like a big win like today makes up, and I didn't have to risk. I didn't have to risk a lot. Like I only risked $239. And it's the powers of micros, man. Like if had I put on a mini, I understand that I could have passed the challenge in one blow. But there's no need for that. Like there's no need. Number one, when you're trading a $50,000 account, this is what I told you guys. When you're trading a $50,000 account, you're trading a $2,000 account. That is the fund or the leverage that you get access to. That's the risk. That's the money that you're playing with. You're playing around with a $2,000 account. Period. And because they have the $50,000 number there, that $50,000 number is just an illusion and making traders think that they could trade how the heck they want. And they could. They honestly could. I know some people are very like disciplined, and they could do it the way that they want to do it. What do I mean by that? They can use minis and things like that, and it doesn't really affect them, and they're a lot more selective in their process. But I think that for the sake of emotions, and if you want to take this as a learning experience and actually manage it well and sustain this account, because funded accounts are not to keep forever, but you want to keep them for a good time. And there's a lot of regulations that are going to come to the prop firm industry, especially for futures, because this kind of takes away from the idea of people opening up their own opening up their own accounts through a broker where they're able to trade their personal funds and actually provide liquidity to the market. So this is not going to be around forever at the current stance that it is. I'm just trying to take advantage before those regulations come. And I know that next year, I know that there's a lot of regulations coming soon. But you just got to take advantage of it and use this as a learning process. Like, you're still putting down $50 to get this account, right? You're still putting down $50. And that $50 is still kind of painful, especially if you don't have that money to put up, but you're still getting these accounts. And it'll teach you discipline over time. It's a great way to learn. It's a great learning tool. And if you make it to the funded stage and you get paid out, man, that's also amazing for you, man. That's big ups to you, man. So I literally had to figure out the way I wanted to approach these prop firms, and like trading trades that have a lot of points. Like today, we almost got not completely, but almost 300 points, so like around 260 points. And those are the type of trades I'm looking for, man. I'm looking for solid trades in one direction, 100-point trades, 80-point trades, even 50-point trades, and instead of going for those 20-point scalps, 30-point scalps, like this is a lot more sustainable to me. And it's just like a lot less stress because I'm only entering that one nice trade. And if I get fulfilled out of it, then I'll stop trading for the rest of the day. Like today, I was like, yeah, there's no point in me trading today. This is a perfect day. I can't even complain. So I love my average trade duration. I love how long I'm staying in trading positions for. Like I'm in that within that 1 hour to 2 hour mark, and that's what I like. Every time I trade 4 hours and more, these trades are always ending up in my opportunity as far as I have seen. And when I'm also trading that 1 to 2 hour range, these are optimal trade entries. Like these are optimal trades and setups that are taking my account to a better level. And then when I lose, I just lose like $300 or $250, whatever I decide to risk. So thank you guys. Again, you guys are seeing me use ICT concepts. I'm not completely done with them, but you guys took that out of context. But you know what? Maybe I should do that more often because, it was a clickbait, man, and I got a lot more views in the matter of that small time window versus what I've gone in the past when I was doing my personal account, which I'm going to get back to, but I want to get this first down. Focus on one thing at a time. But you guys, man, you know what? Matter of fact, this next title that I'm going to put on for this video is going to be clickbait, because that's how I get people watching. And now everybody want to talk and put things in my comments. And when I'm asking, what should I teach? Nobody want to put nothing down. You guys are crazy. I'm talking to you. Crazy. But anyways, guys, have a great day. God bless you guys all. Hope you guys have a phenomenal day. And yeah.